I'm saying today we are looking at institutional and non-profit making entities accounts. And these are organizations whose mandate or objective is not supposed to make profit. They are there for purposes of what we call the social economic welfare of the society. And in this category, we'll confine ourselves to schools or educational institutions and hospitals. Did you know that schools are not supposed to make any profit? You cannot compare knowledge with anything. That is the rationale. Also, hospitals are not supposed to make any profit from the health of individuals that they try to resuscitate. So that's the argument. All the same, we have both the public and the private sector. And the reason why the government has really invested in education is because when you educate and pass that knowledge, impart knowledge to the society, it should reciprocate by these people, by the knowledge being an enabler to the economic growth or development. So you go to school, you get knowledge, you come back, you build the economy, and then at this point, the government now start enjoying its fruits through you paying the taxes. That is the rationale. But because the government doesn't have the capacity to absorb every other student who needs knowledge, they have opened that window to the private sector, those people who are willing or they are interested in changing lives. Kindly mark my words. I'm very selective in the choice of words because you cannot trade knowledge and you cannot trade health. You cannot compare knowledge with anything. Neither can you compare health with anything. That's the argument. Apparently, in our country, it's a business venture. So having said that, the institutions are not, actually, they do prepare the statement of comprehensive income, but it lacks the trading aspect. You know, when we are doing the financial accounting, we talk of the trading profit and loss account, because out of the trading activities, you're able now to generate either income or you incur a loss, isn't it? But when you come now to the institutions or the non-profit making entities, the objective is supposed to be changing lives. So whatever you do is try to match your costs with the services that you are rendering, so that at the end of the period, you will have either a surplus or you break even. To break even is where you don't have a surplus or you don't have a deficit. Otherwise, no one will start a school if they'll continue injecting more cash into the school without getting a surplus. And we saw this on eve of Corona. Most private schools were unable to come back. Reason being, especially those who are operating on rental properties. It was very hard for them to come back after the closure of almost over a year. So most of them closed down. The proprietors of those institutions had already ventured their interest in other businesses, because no one has ever thought that education will be a risky venture. So when Corona happened, and that money did not come in form of school fees, most investors were crippled. So they couldn't meet even their short-term obligations like paying rent, paying teachers. So teachers were sacked. Some went and started doing other small businesses. Some were absorbed in the mainstream industry by TSC. So it was very hard to start all over again when the containment measures were stopped. Now I want you to focus and think why they were unable to come back. If I was operating a business and the nature of my business is consumption in nature, assume a boarding school. When the boarding school is closed, there is no expenditure. Now hold constant the salaries of the teachers, those who are paid when they are away. You don't have expenditure. So the assumption is students are not in school, so you are not paying electricity, you are not paying for the upkeep, that is meals, etc, etc. Assume the teachers are on contract. So where did the money go for these investors? If you look at that perspective, you will agree with me that schools are not profit-making bodies. But in Kenya, there are. We know there are institutions where school fees for only one term is over 1 million. You know those schools, the likes of Peponi, we have Brookside, Briban. We have schools that are overly expensive. We have St. Andrews, Turi, etc. So the purpose of this topic today is to know how to prepare I'll call it an income and expenditure account because it's not a statement of comprehensive income per se. Many people, when they go into a training institution, they don't recognize the presence of an accountant. We have a guy called Bazaar, and the work of the Bazaar is simple. They receive receipt and give back the receipt to the one who has brought money, isn't it? That's the work of the Bazaar. Receive either the bank slip, if the mode of payment is through the bank, and they give you a receipt in return. When you ask the Bazaar for the books of accounts, they cannot give you. That's why it was very hard to know whether the schools are operating at a surplus or a deficit. Well, the main sources of revenue in an education institution is admission fee, tuition fee, transport fees, boarding fees, examination fees, income from bookshop, if there is any, among others. So if the school is operating other income generating activities, like there are some schools that will have an in-house kiosk where students can easily go and buy bread, snacks, stationery, etc. So those are the major sources of revenue. What needs to be done is separate accounts are supposed to be kept rather than putting everything. You recall when you were studying farm account, rather than boggling everything in the cash book, it is easier to have these different cost centers operate their own cash book, and then at the end of the day, all the balances in those ledgers are brought now into one end of year account, all end of year book, what we call the income and expenditure account. The reason why we are not calling it a statement of comprehensive income, it is because there are no trading activities. The purpose here is to impart knowledge and change the society. Once the society has been changed, ripple effect will be economic growth due to what they'll be giving back in form of services. So proper records should be kept for items or the materials that were purchased and held in the store to be issued out. If you look at the school perspective, the major consumption department will be kitchen. Because if it is a boarding school, the student must eat. So you can imagine every day, depending on the number of students, you may end up cooking ugali with one bag of flour, maize flour. Or you end up cooking githeri with one bag of maize and one bag of beans. So this should be controlled. Of course, other consumables will be tissue paper. You need to pay for electricity. You need to pay for water, name them. So the consumption department will be boarding. And that's why it's very easy for the government to say they are going to sponsor tuition fee. The reason why they cannot go to boarding fees, it is because different institutions have different standards. The standard at Alliance Girls or Kenya High School will not be the same as what do we call it, Chavakali boys. You heard what happened to Chavakali boys on the dawn of this morning. Boys decided to go to the neighbors' properties. They took several cows, slaughtered them. Then they went and they slaughtered several bulls. Then the heifers were milked. They prepared some nice tea and ate the meat. Then in the morning, they told the principal, the deputy principal who is in charge of discipline, that if any step is taken, they are going to burn the dormitory. Apparently, those are the kind of students that we have. Maybe they are depressed or they are tired. Well, I want us to go directly to the preparation of the institution's accounts and see how it pans out. I've shared this on the portal. Kindly open the portal, because of myself, I'll be using an Excel. So you're going to lose the open the portal so that we go together. I'm waiting for you to open the portal and you confirm once it's open.
We are here.
You're good? So we've been told to prepare the income and expenditure account for Elimubora Academy. You've been given a trial balance showing the several items. We have assets, we have liabilities, we have income, we have expenditure items. So our mandate here will be splitting what belongs to which book. It's as simple as that. And that's why I say the work of the bazaar is so simple. The bazaar is in charge of payments and receipts. So they'll just wait for you to go and pay school fees. They'll give you a receipt back. Then of course, go and bank the money. Some schools, you need to bank the money in the school account, bring the receipt to the bazaar. Not the receipt, the bank slip to the bazaar in exchange of a receipt to show that you have paid. So it's as simple as that. Bazaar's work is so simple. But bazaar is supposed to be an accountant, or is supposed to be the chief accountant of the institution and advise professionally when an institution needs to take care of the expenditure items and when these departments or the different departments are supposed to control the cost, to ensure that at the end of the day, there is a surplus and not a deficit. Some schools receive or have invested in bursary. So the owner has said, I'll go outside there and get bright but less fortunate students and pay their school fees. The rationale is, you see, the teacher will still be paid. Whether we have 10 students or 15 students, we'll still pay the teacher, isn't it? Whether we have 1,000 students or 50 students, the cleaner will still clean the classes. So it beats logic to deny those bright and less fortunate students the chance, because you are not adding any extra resource. Maybe the teacher will increase the volume, but especially day scholars, you can sponsor as many as possible. And that's why the government doesn't have a problem. So let's see how you're supposed to do this. So I'll share. So we'll be borrowing from the financial accounting. So everything is financial accounting. Actually, here we are just doing the entries. So we've called our institution Elimubora. Elimu bora. This is income and expenditure. Kindly note, there is no trading account in the not-for-profit making entities. What's the period for the year ended? What's your period? When is the year ending? 2016.
That 1st July 2016.
July, that 1st July. So there we are, just in the normal way. Compare, we have two columns. What I'll be doing, I'll be going to my equation to look at we start with the income items. You can start giving me the income items. You look at the income items and then the expenditure items. Merge these cells. Don't look at my screen. Give me those incomes. Just trying to adjust it to look more or less like an income and expenditure account. So we go together. So I'll check. Look at we've said the major sources of revenue in a training or in an institution. In an institution will be school fees, any bursary, and any other contributory fund that the owner might bring into presence. Yeah, there are some schools that will be needed to split the boarding fee, the admission fee, the tuition fee. So they are split. So that's the only form of income that you're going, and any other income generating activity that the student might be running. So the first one is fees. We have the school fees, right? And it is split. We have the school fees for boarders. This is because the year school fees is a bit high. And I have the school fees for the scholars. What's the fee for boarders? What's the school fees for boarders? It's very easy to know whether you have opened that question or not. Mzungu, you said you opened the question. What is the school fees for boarders? It's Mzungu in this class. Mzungu. Principal, will you open the question?
Yes.
Give me the school fees.
1,005,000.
1,000,000?
5,000.
5,000. Let me convert these two columns into money. Like that. For these scholars, 110,500. Which other income do we have? You can see we have contribution from staff for meals. So staff are contributing. Contributions from staff for meals. Let me be specific. What are they giving? You can add this. This belongs to the same family. This. What have the staff contributed? 12,000. Then the other contribution is, I have bursary fund. Yeah, we have that part of bursary that is income, bursary fund. The amount is 7.5, right? Any other income? I'll leave some few lines. I'll not spot any. Expenditure. Look at the expenditure. I have teacher salaries. You start with what you know. Teacher salary 338, right? Then I have the other salaries, general salaries. What's the general salaries? That's 449. 449. We go on. Look at the additional information. We've been told provision for extension and improvement is to be increased by 210. Provision for extension and improvement is to be increased to 210. And whatever had been provided for in the trial balance is 120,000. So we are now increasing our provision from 120,000 to 210, right? Increase in provision is an expense, isn't it? Isn't it? Now this financial accounting, provision for extension. So the year 210, then whatever had been provided for was 120. So 210 minus 120, this is 90,000. Then on the same additional improvement, on additional information you've been told, and paid operating cost as at 31st July amounted to 15,000. Amounted to 15,000. We have operating cost. $15,000. Can you spot any other cost? Let's look at the unknowns. Look at the bursary fund. We've been told short-term deposit bursary. There is catering, 114,000. That's a cost also. Catering. So those people who are preparing the meals, 100 for both staff and students, 114,000. Then I have bursaries, bank and building bursaries. We have bursaries of 13,000. It's a debit. It's an expense. So there's a difference between those bursaries and the bursaries that we have down there. You see the bursary fund that is split into capital and income. They've been credited in the trial balance, which means they are incomes. One is capital, the other one is income. But the bursaries that we are seeing here, up here, the 13,000 is an expenditure item. Should be knowing that all expenses are debited, incomes are credited. So I have bursaries. And these bursaries amount to 13,000. Any other cost? Are you seeing any other cost? Are you able to trace any other cost? You can't see. You can get the totals. So P is equals to the sum of these three cells. So I'm getting that as my income. Then I add my expenses. So this is equals to sum. So I'm getting 1019. I subtract it from 1135. Know whether it's a surplus or an expense. So in this case, this is a surplus. The figure is bigger. So there are instances where you are going to get an expense. Just indent this. So my surplus is that minus that. I get 116. But if you look at the question, we had a income and expenditure account that had been brought forward. What was that amount? We had income and expenditure that had been brought forward. So I have income and expenditure brought forward. The amount was 14,000. So my income, this is the figure that we are looking for. This is what we'll be taking to, I can just call it brought downward. So my income and expenditure to be carried downward. We no longer use brought forward and carried forward. They are old school. So it will be this, the surplus, plus this. So this is the amount that I'm going to take to my balance sheet. As simple as that. And go on to the balance sheet or the statement of financial position. And that one will just document the assets and the liabilities and the capital items. Can do it on this end. So I could copy this. This is now a statement of financial position. So here we are. Start with the assets. Shillings. We start with the assets. And for the assets, we arrange them in the order of permanency. I have estates. They are called estates and premises. What's the value? They are valued at 12.15. 12.15. Change this into money. Estate and premises. The other asset that we are seeing there is, we have equipment, and it's tied with furniture. Totaling to 120,000. The other asset, so these are the non-current assets. Should have indicated non-current. But I have investment. But investment will not be, I'll just add it down here. The bursary, we have that part of bursary that is investment. We'll add it here, and we are going to add it back as capital because the owner has put this. If you recall the what do we call the definition of assets? Assets are resources that the owners will pull into business for purpose of generating any revenue. So towards this, we are seeing a bursary of 110. So that is can indicate here bursary. So to me, that is an intangible asset that the owner has fed into the business. Any other asset? No assets. We go to current assets. In the current assets, I got stock. The figure for stock, 14,000. Then I have debtors. What's the figure for debtors? Then I have bank and cash. bank and cash to 11. Then on the same, I have short-term deposit, the building fund. These are short-term, or these are current assets because they are short-term. Definition of current assets, they are those assets that will be retained in the business for less than 1 year. So that's 121,000. So short-term deposits, 21,000. Any other asset? See any? So I can sum this. That is 358. Then you go to the current liabilities. Current liabilities. I have creditors for the supplies. What's the amount of creditors? 19,000. And then in the additional information, I have the unpaid operation expenses. Of 15,000, what I was confirming. So unpaid operation expenses, all operational costs. These are liabilities that the business need to meet, 15,000. Seeing the school had no much liabilities.